Hello, I'm Alan Kohler, founder of Eureka Report, now part of Intelligent Investor, finance presenter on ABC News, and a columnist for The New Daily.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey, shareholder, activist and retiring City of Manningham councillor.
And we are the Money Café. And when do you retire? When do you retire from?
October 26, Alan. So that's when formally the last day. We go into caretaker on September 17.
They're giving you a party send-off? You know, there's a gold watch?
No, but 12 years is enough, I think. And how about in New South Wales, where the Liberal Party failed to nominate over 100? I just find that hilarious. Frankly, I think political parties shouldn't even be in local government. So
I agree.
So maybe
but they use local government to, find the next
it is a
next
great
generation of talent.
It's a great training ground. So they should only use it to train their talent. But when they have factional meetings and block voting, and you get sacked if you don't vote for your mate as mayor, and you can't talk to the Greens, all that political party crap should not be in local government. We're all in cabinet. We're all ministers around that council table. We work best when we're not shackled by some party bullshit.
So your next step is federal parliament, is it, Stephen?
Running as a teal.
Well,
no.
You're the wrong gender for teal.
I'm the wrong gender for a teal. I did run I was a teal before a teal. I ran in Menzies in 2016 against Kevin Andrews and got 7%, I think. But speaking of teals, Alan, your new colours on the ABC News, have you just borrowed from the teals, haven't you?
Well, look, I must confess I had absolutely nothing to do with all that. It's been in the works for months and months, and it's been a difficult birth the last couple of nights. I've been standing around the studio for ages. They mucked around with the new framing, and oh god, it's anyway. Yeah, there it is. New look. I have to do what they call an MCU, a medium close up to begin with, and then after the first paragraph or so, I have to turn to another camera, and then do the rest of it.
Last night, the pivot.
There's a pivot in it. Yeah, I got to turn.
It's a bit like the weatherman who sometimes turns as well. So
yeah.
So
anyway, we got
what's driving this anyway? It was looking a bit tired, was it? Or
yeah, a feeling that it's about time for a change. There's I think they've reintroduced the old music to the ABC.
Yeah, the music's coming back. Yeah, that's exciting.
So there's a bit of
nostalgia,
a bit of change going on. Yeah.
What time do you get into the studio when you do that?
I generally record about 5, I suppose.
And you get in there. Do you do all your research at home, or do you?
No, I go in there.
You go in.
I spend the afternoon.
Yeah.
In at the ABC, talking to my friends in there, and writing the script, doing the graphs. Yeah.
I loved your John Howard line where you said that John Howard came up to you and said, "My wife really loves your ABC report," and your comment was, "It's always these powerful guys' wives who like it, not the guys themselves."
Well, they always say that. That's right. I don't know why they can't admit it.
They like it themselves.
They can't, but they can't admit that.
Yes. Yeah.
I don't know why.
Yes.
But yeah.
Now, you've been riding up a storm on immigration, which I thought was a very interesting piece in the New Daily about the students and housing crisis.
So I wrote this quarterly essay about housing. It was published coming up a year ago, and there was something in it, something that I missed about housing that I only discovered last week, which was that student visas and the way student immigration is handled changed on July the 1st, 2001. And I wish I'd known it a year ago, because it would have gone in the essay. And what they did in 2001, on July 1st, 2001, is that they opened up foreign student visas to what are called non-gazetted countries, so there were gazetted and non-gazetted countries. Gazetted countries included the UK, Europe, America and Canada, New Zealand. Non-gazetted included India and China and Bangladesh and Philippines and so on. And they were suddenly allowed. And also they opened up the path to permanent residence for students. They made it transparent and easier. And as the guy who was actually in the immigration department at the time, and who I think managed this process, named Abul Rizvi, who's now retired, wrote in a book, that changed Australia forever. And because the most immigration now is the majority of immigration now is foreign students, and
which is a good thing, I would argue.
Well, it's the problem with it is that it's uncapped.
Yeah.
Permanent migration is capped.
Yeah.
Temporary migration, including students, is uncapped, and it's demand driven. That is to say, it's the amount of it is entirely determined by the universities and colleges themselves, who are trying to get revenue, right? So these students are not migrants; they're customers, and they're recruited by agents in those other countries, in India and China, who get paid 15% commission. Well, you know, I don't think that's any kind of way to run your migration system.
Yeah, and I was at a recent Chatham House lunch with an expert on all of this, who said, you know, there is 500 visa categories. I thought that was an amazing comment. But who also said there should be a visa called cheap labour visa, because that's what students has become. There's all these student schemes that effectively are a cheap labour visa by another name, and effectively you've got all these ghost colleges and fake colleges and all that sort of stuff. So
that's
it
the
has
point.
been rorted.
And the point is that these universities and colleges aren't really selling education; they're selling a visa.
Correct.
And that's what the agents in those countries are doing. They're selling a visa in return for a 15%.
But you get a lot of the small business operators, the small retail operators in Manningham are also doing the 2 years to get their visa, and you've got also the significant investor visa. So there's a whole bunch of ways to get a visa and permanent residency. But you're correct to point out that the student visa has become the largest one.
The other thing I didn't realise, which I've also only recently discovered, and didn't make it into my column on Monday, but it will be in an ABC piece that I'm going to record tomorrow for Sunday, is that education is described as Australia's largest non-mineral export, right? $48 billion a year, fourth largest export after iron ore, coal and natural gas. And however, it's actually dodgy numbers. What the ABS does in order to achieve that 48 billion number is that they just count or estimate. It's not actually counted, it's estimated. They estimate everything that foreign students spend in Australia.
Oh, okay. Including that's a really cooked up number then.
Their tuition fees plus all of their spending to live here, rent, food and so on. And the trouble with that is that a lot of the money is actually earned here. As you say. I mean, they get a job, right? And so it's not money that's brought in. And in fact, if you look at the data, they seem to be sending money out, repatriating more money than they bring in. So it should be called, foreign education should be called an import, not an export.
Yeah, fair enough. I'll never forget being a City of Melbourne councillor when Glyn Davis came to talk to us, and he was the Chancellor of Melbourne Uni. And he walked in the door and he said, "I am your biggest export earner. We are making $300 million a year from foreign students. We have 12,000 students at the Parkville campus in the city of Melbourne, which is the largest of any campus in the world." And I saw him a few months ago, and I said, I always remember that quote. He goes, "Yeah, it's now 14,000." He's now the head of Prime Minister in Canada.
Well, that's right. But
so he knows about this stuff.
That's only an export if all the money is brought in. And it's not. It's earned here. So, you know, it's rubbish, actually.
42% of the residents of City of Melbourne are students.
42%.
It's one of the top 4 international student cities in the world. And you combine that with Jeff Kennett's brilliant deregulation of retail trading hours, and you have one of the most vibrant 24-hour economies, nighttime economies cities in the world, Melbourne. Thank you. And the students are a huge part of that. But people don't like the congestion and house prices are going up.
I don't like the congestion.
Scott Morrison stupidly kicked them all out during COVID, which was a stupid decision.
You acted as if that's bad to not like the congestion. Congestion is bad. Speaking
of congestion, at my second last council meeting, we are coming up with our submission as to where we're going to find 39,000 more houses by 2050 on top of the 51,000 houses we currently have in Manningham. So councils right now are being told to draw maps and come up with plans to accommodate this massive population growth, much of which is for students, as you say. So look, it's difficult. Fast population growth is difficult. There's a backlash all over the world against too fast immigration and skyrocketing housing prices and stuff. It's a difficult issue.
So moving along, what have you been keeping an eye on the reporting season? What's going on?
Oh, look, it's 9:30 this morning, Alan. I've already gone through the AUB, Breville, Brambles, Cleanaway, Domino's, Fletcher Building, HMC Capital, Helios, PEXA, Centre Group, Lottery Corp, WiseTech reports this morning.
I've been everywhere, man.
Yeah, it's such a deluge. You just can't keep on top of it, can you? But the one little snippet I'll give you from this morning was Scentre Group did not take write-downs on their property portfolio, and they claim to have net assets of 18 billion, and the market cap is 17.7 billion. So I'm happy that Scentre Group, which owns 42 Westfields, is actually accurately reporting the value of its properties. Whereas Dexus, yesterday, Australia's biggest office tower landlord, did take, $1.5 billion loss, but they're still claiming that they're worth 10.16 billion when the market cap is 8 billion. So they still haven't written them down by enough. And then compare that with Goodman Group, the world's biggest industrial property manager. They took 5 billion in write-downs to claim they're only worth 18 billion, but the market cap is 63 billion. So it's all over the shop.
So Dexus and other office tower owners
still have not honestly written down their assets.
Working from home is just a passing fad.
Yes, sure.
Don't they? That's what the thing is. They think that it's a passing fad and it's all going to come back. And everyone's going to come back into the office and they're all going to be full again and it'll be great.
It's delusional.
It is.
It is absolutely delusional. And the growth is in data centres. Goodman Group is moving to 50% of their investment being data centres. Their market cap is currently 63.4 billion. They are 3.6 times more valuable than Westfield. Goodman Group. So what does that tell you about where the money is in property? It's in warehouses / data centres, industrial.
That's right. Of course. Now, you're all about gambling ads. What's going on with the debate?
Oh, look.
And is it because, is the whole argument, or is the government reluctant to do it because the media companies are telling them that they'll go broke if they haven't got gambling ads?
Yeah, well, Kerry Stokes and Rupert Murdoch are running it big time in terms of pushing the argument to not ban it because they're massively dependent on it. But Kerry Stokes is worth $8 billion and his Seven West Media shares is less than 1% of his wealth.
I know, but he wants to stay worth
Seven West
$8 billion.
might go broke if they ban the gambling ads because they're paying up big time for AFL rights, and if they suddenly can't have any gambling ads, then it's difficult. I mean, Foxtel's paying $400 million a year for AFL rights starting in a couple of years, and that's all predicated on gambling ads, and News Corp's looking to sell Foxtel. So look, old media is difficult, but look, let's not bring back tobacco ads just to help old media. The gambling ads are a shocker. The government should just compensate them for the losses and treat gambling like tobacco because it's a public scourge, and Albo's under pressure because everyone wants to have to do this, but he's captured by AFL, NRL, Stokes, Murdoch, and won't do it. He's gutless, hopeless. And his political party owns 4 pokies venues in Canberra, so he's in the gambling giggle himself, just like the CFMEU is too.
He's in the gambling giggle. I like it.
Even the Catholic Church is running pokies venues in Australia, so we're never going to get on top of this unless we make decisions like banning gambling ads. Casinos are going cashless. The Adelaide Casino's just been written down by 90 million this week because the cost of going cashless, that's a good move. So casinos is the only thing we've cleaned up. We need to ban the ads and then we get onto poker machines, which is where most of the harm is done.
Yes. Okay.
Victor Schvetz. You got your mate Victor Schvetz.
So I interviewed Victor Schvetz, who is the New York-based strategist for Macquarie Bank, and an excellent strategist he is too. And I spoke to him yesterday for 50 minutes. He's got a book out called The Twilight Before the Storm, From the Fractured 1930s to Today's Crisis Culture, How Can We Avoid a World on Fire? And it's a great book, and it's a fascinating interview, and it's going to be outside the paywall. When's it going to be published, Greg? Tomorrow. So it'll be on the Intelligent Investor website tomorrow, not behind the paywall. I strongly urge people to tune in. I mean, the thing about Victor, he's great to interview because his answers are 10 minutes long. And during a 50-minute interview, I only had to ask him 5 questions. It was great.
Well, Victor's famous, because in July 1990, I was a young reporter. He was working for Baring Securities, the Queen's Bank that Nick Leeson sent broke, and he produced a devastating analysis of John Spalvins's Adsteam Group, which then owned Woolworths. It was owned massive bank shares. It was a huge Penfolds. It was a huge conglomerate. And he called time on it. The stock tanked 20% in 2 days, and it was broke basically 9 months later in the largest workout we've ever seen in Australia, which David Crawford ran for 10 years. And Victor was the famous young analyst at Baring Securities who blew the whistle on one of our most debt-laden, complex conglomerates, the Adsteam
So
Group.
he must have been a very young man then, because that was 34 years ago.
That was 34 years ago.
And, crikey, he must be as old as me.
Yeah, he must be like Grandpa Kohler in his 70s. So I'm interested you putting it outside the paywall, because I listened to 3 of your paywalled interviews yesterday with the CEOs of Drone Shield, Lark and Caprol, and I just had to plug to the listeners of Money Café. I know most listeners it's free to listen. If you subscribe to Intelligent Investor, you get all these amazing Alan Kohler interviews with all these CEOs, which are really interesting, and it's quite cheap, isn't it? The subscription.
$330 a year.
Yeah, so
And you not only get the interviews, you get my Saturday weekend briefing.
and which is the cherry on top. That's fantastic. It's the best read every weekend. And I'm actually filling in doing a couple of interviews for you in September. So
I'm having a couple of weeks off, and Stephen is going to do some interviews. So that'll be
sign
good.
up, folks. Get behind the paywall. Support.
You're gonna barbecue some CEOs, aren't you, Stephen?
I'll behave myself, Alan. I won't get you sued.
Before we go to questions, here's a quick word from our sponsor.
Income investing is a crucial component of many Australian portfolios. Identifying businesses that can deliver long-term dividends requires extensive time and research. The Intelligent Investor Australian Equity Income Fund simplifies this process with a concentrated portfolio of Australian equities focused on delivering both sustainable yield and growth. Managed by Nathan Bell, a seasoned value investor and his team of analysts with 20 years of market-beating performance, INIF is set to shine in the next market cycle. For a limited time, invest in ASX INIF with zero brokerage fees directly with Intelligent Investor. Visit offer.intelligentinvestor.com.au/INIF for details.
Okay, Paul says the concept of active and passive income is embedded throughout our tax code everywhere except personal income tax. What if active income, basically wages and salaries, was taxed using different tax rates than all other personal income? You could create a flatter, more aggressive tax table for passive income like dividends, rent and interest, which is unlikely to affect low-income earners. This seems like a way of increasing the tax take from people like me without hammering younger taxpayers like my children.
Couldn't agree more.
Well, is that right, that the concept of active and passive income is embedded in the tax code?
Yeah, I think it is.
Like what?
In some of the super things, I think it's there. But I like it because the people, we're overtaxed at a wage earner level, and battling young families with the mortgage and the school fees, it's hell. And then you've got all these tax shelters in super and people getting franking credits, and so I think give the working battler a break with a lower tax rate and tax passive income more highly. I agree. So
some countries have a wealth tax, which Australia does not have.
Maybe that's what death duties or
no? Well, it's just a wealth tax on wealth.
No, we have a wealth tax in Australia. It's called council rates. It's based on the wealth of your property. Westfield pays $3 million a year at Manningham. It's a wealth tax, but it takes you 500 years to pay the value of your wealth in tax. So it's a very, 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 very low wealth tax, but it's one of the few wealth taxes we have.
Well, it was that's only in property too.
Only property.
Houses.
Yeah. Now, Harrison says, I listened to Michael Stutchbury on Q&A. He seemed particularly keen to talk about how much tax fossil fuel companies were paying in Australia, saying it's a lot, and therefore implying that it's enough in percentage terms. Do you guys agree? Or is he just protecting big miners like BHP and Rio, and they should be taxed more?
Well, yes, he's protecting big miners like BHP. I mean, of course, that's okay. Tax them. It's fine with me.
Yeah. I mean, our 30% corporate tax rate is relatively high, and we get a lot of money from corporate tax, second only to the pay-as-you-go workers. But the real issue is the owners of the resources, the states, not having big enough royalties. So it's the lack of a decent royalty in WA. It's only 7.5%. That's the problem. As for the gas people, I mean, Santos, Origin, Woodside, their shares have not gone through the roof. It's not like the gas companies are making out like bandits, whereas the iron ore companies are. So I think the issue is with iron ore. Queensland's fixed the coal royalties, 40% royalty rate at the top level, and WA should do the same thing.
Alison says, I was strongly encouraged by my parents to do economics for year 11 and 12 rather than my preferred choice of French. Well, That was at the start of the 1990s. Turning 50 this year, I thought it might be time to start to understand finance, and I started listening to your podcast. It's been fantastic, and I now feel somewhat confident discussing finance. Excellent to hear, Alison. Glad to be of assistance. So my question is, have I left it too late to start investing on my own? Would I be better off focusing on my superannuation and maximising my retirement income? Current situation is my husband and I are close to paying off the mortgage on our family home on the Central Coast in New South Wales, and we have an investment property in Hobart. I currently have a superannuation balance of $704,000. Thanks for your advice and the great show. We can't give personal advice, tell us, Alison.
But just keep
so
it going.
You've given us too much information.
She's going well.
Sure.
She's got the investment property. She's almost paid off the mortgage. It's $704,000. So I would say, Alison, keep it up. Just, enjoy the compounding of super, max out the negative gearing on your Hobart investment property, pay off your mortgage, and hopefully you won't be on the pension at 67.
That's right.
The vast majority of Australians still are, despite super.
And my best advice, Alison, is to don't let your husband do the investing, because women are so much better at investing than men. They take too much risk. And women like you, Alison, are good at it, and there's no reason why you can't sort of focus on it and learn about it. I think you might enjoy it.
Do you know, I got the top 5,000 at CSL to test the thesis as to whether the women hang on to shares longer than men. And it was true. A lot of the top 5,000 shareholders at CSL who bought in on the float in June 1994 were women. And $2,000 investments now worth like $1.3 million. And men are impetuous. They often sell out. They take the quick profit. But someone came to me and said, no. That's only because blokes were dodging tax, put it in their wives' names, and the blokes die earlier. The wives have inherited the shares. So
the blokes have got testosterone coursing through their veins and have to act all the time, do stuff. We
correct.
have to do
Whereas
things.
women buy and hold. They're better. They're more patient investors, and the best investors are the patient ones.
Exactly.
In CSL, Woolworths, Cochlear, you name it. Now, Declan says, I grew up watching Alan on the TV as a kid, and I got the idea for my honours thesis from a tirade Stephen gave back into 2020. Reece Stevens' August 7 pod comment about AFIC trading at a 10% discount to NTA. I have a theory. To paraphrase, Declan says, it's because the household savings rate has fallen. Some of the 160,000 retail shareholders are selling their AFIC shares to spend it. Now, Alan, I reckon he's right. AFIC shares got to a 25% premium to NTA during COVID because no one was spending money and the government was deluging cash. So people were parking it in AFIC. But now that the savings rate has fallen below 5% to a 10-year low, people are going to the bank of AFIC, selling their shares to live, and this is why it's trading at a 10% discount to NTA. It's a supply and demand thing, and people are tapping into their savings by selling their AFIC shares, which means it's cheap for others.
Well, Declan, we think you hit the nail on the head there. We thank you for your excellent insight. TG says, why is the ASX a private company at all? I can't think of any other market maker regulator that is private. It seems obvious that it should be a publicly accountable market maker, as with AEMO in energy markets. What would happen if the ASX went bust? Well, it was privatised because all the stockbrokers who owned it wanted to cash in their chips and make money, which they did. And so it was simply a rort.
It was a rort. There were 626 stockbrokers who'd paid $25,000 for their membership. They demutualised it with Morris Newman driving the cash grab. Howard and Costello legislated to make it happen. They should never have done that. They created this gouging public listed monopoly on itself, and then you've had the debacle of the $250 million chess write-off. It's not going to go broke, but it shouldn't be a monopoly.
Not only a big write-off on chess, that the ASIC is going after them for misleading the market.
Amazing, wasn't it? But not going after any individuals. Because if you started going after individuals, you'd be charging the great and the good of the world like Ken Henry, who spent 9 years on the ASX board. So they're just suing the entity, and they're going to have to plead guilty, Your Honour, because they did try and claim everything was going great with chess.
They did.
The CEO's farewell
again
press
and
conference.
again and again. Everything was fine. We're just going along fine, but it wasn't fine at all.
And you know why they haven't been sued for class action?
Why?
Because the stock didn't tank. Because they're such a lucrative monopoly, they were easily able to lose $250 million and no one blinked. Because they gouged so much.
So does that mean ASIC will lose?
No, ASIC will win because but it'll just be a fine, $10 million fine. You're all guilty, but life will go on. But I think it's good they're taking the action. Surprised it took them 20 months to do it, but better late than never, I guess. Now, Todd says there's a lot of discussion about greenwashing and the E in ESG funds, but there's not much about the S, which is social. And Todd points out that Australian Super, our biggest industry fund, has a product called Socially Aware, and they've had some coverage about debt funding military weapons and the like. What hasn't been getting run is their $2.2 billion investment in a 6% stake in pokies giant Aristocrat. So Todd just goes on to say, how can Aussie Super have something called Socially Aware when they're a huge investor in Aristocrat? They've also got 6% of Endeavour Group, which is Australia's largest pokies operator. And Todd, I agree with you that Australian Super is the biggest investor in gambling companies, and they shouldn't be. But this is only a product. So they have got a product called Socially Aware, which is not invested in gambling. So they're not saying the whole of Aussie Super is socially aware. They're just saying if you are socially aware...
Oh, so the socially aware product is not investing in Aristocrat.
Yeah,
it's
correct.
Australian Super itself.
Yeah, that's right.
Oh, I see. Right.
But I think it's a disgrace that Australian Super is so... I mean, they've made close to $1 billion on their Aristocrat shares. The stock's at $53. It's gone through the roof. So look, they're making it.
Good for them.
It's on it. But it's been a shocker in Endeavour Group. They've lost money in Endeavour Group. AFIC sold out of their Endeavour Group shares when Woolworths demerged it. They said, we don't like gambling. We sold the lot. And I say, Aussie Super should have done the same thing.
Yeah. Fair enough. What have you got to say about ethical investing in general?
Oh, well, look, Australian Ethical is a listed super fund, and it is super clean. No, they don't go near any dodgy operators. But it's not easy because, some of them try to avoid, fossil fuels. But look, yeah, Australian Ethical is the one that I've seen over the years that's done a pretty good job, and they're not going to get done for greenwashing. And you see, Mercer's got fined $15 million the other week for greenwashing. That's a big US, Wall Street sort of giant, and a $15 million fine for greenwashing. So I reckon there should be a fine for social washing at some point.
Stephen says, when recently discussing super, James commented, you get what you pay for. Isn't that the opposite of the truth about returns, i.e., higher cost active managers have been proven to consistently underperform. More people are employed in the super industry than the ADF. What would happen if we cut them away and had three big brain employees invest all of Australia's people's non-SMSF super in a mix of diversified ETFs for a fraction of the cost? Yeah, three people investing the whole lot. Sounds great.
We should have had a big national default fund, shouldn't we, when Keating set up compulsory super, I reckon. Well, there's too many people, ticket clippers in super overall.
Well, I think, the problem with super is that you can't know. Firstly, you get defaulted into super funds, and so therefore some super funds do better than others, and you get defaulted into a super fund that does worse, and you end up with less money in retirement through no fault of your own. But even with super choice, you can choose a super fund, but you've got no idea what's going to happen in the future. You can see what they've done in the past, but as the super funds themselves say, past performance is no guide to future performance. So you can't actually make a decision. So I think you're right that the only way to be fair about it so that everyone ends up with the same amount in retirement is if everyone's in the same fund. But as for the get what you pay for thing about fund managers, it's true. The thing about fees is that it comes off the return, right? But therefore you've got to look at after fee returns, and so you've got to choose you've got to look at what the after fee returns have been in the past, and are they any good? Because you can only look at past performance is the only thing you've got, minus fees. But the trouble with fees is that it's true that active managers on average do worse than the market. I think that's true. But I haven't looked at it lately.
But the best do better. But
the best do better.
It all comes down to the quality.
You can, and everyone thinks they're going to pick the one that does better, even though they're charging 2% fees. But I'm going to pick the one that's better. So
the one that is doing it better now is like private equity. So those managers, the best managers in private equity, do substantially outperform and do deserve their fees. Do deserve their big
but they're all going to
fees.
blow up soon.
No. As a category, just like the VCs, venture capital, as a category, it's all part of private capital. The ones who don't make any money are the people who are, listed stock pickers who are buying listed shares. That's a mug's game because everyone's in it and it's very hard to outperform. You've got to be outperforming in the private space. Now, Jack says, I loved Alan's appearance on Chris Kohler's TikTok. last week. It made my week. And the question is, what's the difference between an AGM and a results call? Also, any suggestions for an aspiring shareholder advocate? Because Jack's planning on being an active participant in her first AGM this season. Well, let's first deal with what you did on TikTok with your son this week, Alan.
Well, we just had a little thing sitting at the kitchen bench where he asked me what happened with housing, and when did housing go pear-shaped? And I said 2000, and he said there's a specific year, and I said yes, and we went from there. So that was good. I really enjoyed that. I've been telling him to write another script for it because I don't know how to write TikTok scripts.
You should do it more often. It was because his thing is going great on TikTok, and now you're in on the giggle.
He told me this morning.
Fantastic.
He told me this morning because he's living with me at the moment that his TikToks he puts them on Instagram. He does these things where he's interviewing himself or talking to himself on Instagram. They've averaged 1 million views. He has not had one that has gone below 1 million views.
I just love the fact that the two competitors, the bloke who does the ABC market support and the bloke that does the Channel 9 market support, are living in the same house at the moment. You're living with the enemy, the competitor.
We're not the enemy.
Yes, it is great. You can choose between your Kohler on 9 or Kohler on 2.
Well, no, a lot of people watch both.
6 then 7. It's perfect. It's perfect.
It's fantastic. And yeah.
Now, just on the question of the AGM, I know, Alan, you still haven't attended your first ever AGM, let alone asked the question.
No, that isn't true. I just haven't been one. When I was a young reporter, I used to go to AGMs all the time, and it was so boring.
Yeah.
Well, it was so boring.
AGMs are all about governance, board selection and shareholder democracy, whilst the results is management revealing how they're travelling financially. So that's the key difference. And if you're going to go to an AGM, just make sure the Q&A lasts for at least 15 minutes and then talk to the directors after the meeting if attending in person, because you can often get some good insights with some face-to-face discussions with the directors. All right. Is the super downsizer super contribution, says Ian, another boomer tax gift? All these, I can reckon it's not. Because if you sell your house, a couple can put 600,000 into their super, which is the downsizer thing, and that's not a lot of money. 600,000 into your super.
Well, it's wrong to think about it as a gift because it's all about trying to use the tax system to encourage a certain behaviour. That's all. I mean, so if you want boomers to downsize, you have to do something to make them do it. I mean, you can't. There's no good passing a law that says, as soon as your kids leave home, you have to sell your house. That's not going to work. So you just have to do something to encourage it. And the answer is to give them a bit of a tax break.
And Karen read your piece in the New Daily with 18 ambitious dot points on what new Housing Minister Claire O'Neill can do to assist with housing and affordability. And she wants you to explain your suggestion that they remove the 3% COVID buffer for bank loans. What does that mean?
So during COVID, APRA, the Australian Prudential Regulatory Authority, required banks to add 3% to the actual interest rates people would be paying when assessing them for whether they can repay the loan. So if the interest rate was 6%, or if the interest rate that they were going to pay was 6%, they had to be assessed on repaying the loan at 9%. And that was to just kind of make the system a bit more secure, I guess. But a lot of companies did it during COVID, did the same sort of thing, but everyone else has removed it, but Australia has not, because APRA's I don't know, excessively cautious and has basically left it in place. So I'd say one of the things I said was they should take it away. Come on. There's no need to do that.
Now, Omar wants to know whether Melbourne property prices are not going up as fast as other cities because of all these big new land taxes in Victoria. Now, you keep hearing this. I had dinner with a bloke last week who said that he had lunch the previous day with someone who just sold their 14 investment properties. 14 houses, they own investment properties, to avoid land tax. So I do think that the highest land taxes in the country are definitely driving a lot of selling, but a lot of first home buyers are buying. So there's actually a good policy benefit.
That's 14 houses that have been bought by owner-occupiers.
Correct.
So well done. Good stuff.
Yes. Last question. Robert, I run a small business and AI is quickly transforming things for us. It supercharges our small team and means we can compete more with bigger companies. I assume that while big businesses are adopting AI too, it is slower and less gung-ho. Just interested in your thoughts on whether AI is going to change the business landscape. And I think it is going to help a lot of small businesses.
I think
it's
that's
good
true.
for competition. That's one of the least sort of appreciated things about AI. Small fry can actually take on the big boys because they can lower their costs.
It makes their smaller workforces arguably or potentially more effective.
Yeah, I mean, the whole thing's a disaster for workers because at the end of the day we're talking about, not having people doing stuff and getting AI instead. But yes, it will facilitate competition and innovation and could help a lot of small businesses.
I think that's true. Well, that's it. Thanks for listening to today's episode of Money Cafe. It's been great. I'll be back next week with James Thompson. Send in your question to themoneycafe@eurekareport.com.au and James and I will answer it, endeavour to at least. Till then, I'm Alan Kohler, founder of Eureka Report, etc.
And I'm Stephen Mayne, and we'll see you in a fortnight.